Sir. Yes.
Hello. Good morning. Welcoming all to the 49th AGM meeting. I am Satyan, Company Secretary. Welcoming you all. And our Board of Directors have elected Mr. Krishna Mahesh, Managing Director, as Chairman and to chair this annual general meeting. Now we are requesting our Krishna Mahesh MD to occupy the chair as Chairman of the annual general meeting and conduct the proceedings.
Satyan, could you please confirm that the required quorum is present at the meeting?
Yes, sir. Requisite quorum is there, sir. Can proceed.
In which case, I'd like to welcome the shareholders and call the meeting to order. I'd like to introduce the directors present already. We have Mr. Venkataraman, Director, attending virtually.
Good morning to all.
Morning. We have Ms. Shripra Mahesh Ramanan here in person. I am Krishna Mahesh. I will be here. Mr. P.S. Raman and Ms. Shobhana Ramchandran have requested leave of absence, and we expect our other directors to join in a short while. I'd like to mention that the notice convening the 49th AGM of the company was circulated along with the annual reports to the shareholders, and I request that the same be taken as read. I'd also like to mention that the auditor's report, being unqualified, is not required to be read as per the provisions of Section 145 of the Companies Act 2013. I'd like to inform shareholders who have not voted through the remote e-voting may cast their vote through the e-voting facility available at the AGM. The said e-voting facility will be available for 15 minutes after the conclusion of the AGM. Now, with your permission, I'll deliver my speech. Ladies and gentlemen, I have great pleasure in welcoming you all to the 49th AGM of our company, being held through video conference as given by NSE, BSE, NSDL provisions. The board report and audited accounts for the year ended 31st March 2023 have been with you for some time now, and with your permission, I shall take them as read. In the 4 years since the passing of our founder, chairman, and managing director, the company continues to be guided by his principle and his example. Before presenting the performance highlights of your company for the financial year 2022-23, I'd like to mark the passing of Mr. T. Kannan and note the invaluable contribution he made as a member and director of the company during his 24 years on the board of your company. His kindness and clarity of thought that made his counsel invaluable to the company and its management. His leadership of the Audit Committee and CSR Committee will endure as exemplars of board leadership. More broadly, his towering contributions to society redefined corporate statesmanship. While we mourn his loss, we celebrate his life that made such a difference to the nation. I would like to express this meeting's deepest condolences to his family and request a minute's silence. Thank you. Next, I'd like to make a few observations. The economic outlook. Steep interest rate hikes were necessitated by the inevitable inflation that followed significant cash infusions by the West into economies they themselves had shut down, triggering global GDP growth in 2022 slowing to 2.9% from 5.9% the previous year. The US economy slowed the most with barely 0.9% growth, and the EU's 3.6% was also significantly below its prior 5.7% performance. The Indian economy, in its 75th year post-independence, proved a rare bright spot in global picture with a growth of 7%, not far below its 8.7% in the prior year, and our nation became the world's fifth largest economy. The Indian market is again expected to be an exception to the gloomy global outlook in the coming year, with predicted GDP growth of over 6%. The 33% growth in governmental budget allocation for infrastructure augurs well for the commercial vehicle demand. The highly disciplined budget promises a deficit of only 2 to 2.5%, also frees up the RBI to deal with monetary policy unconstrained by having to mop up fiscal indiscipline that other central bankers have had to. While the government schemes of production-linked incentives and subsidies to select areas of the economy remain a concern in terms of ensuring a level playing field, the overall automotive outlook is positive, with sales growth predicted in the 10% range. The Indian economic growth picture, however, is not an unalloyed positive, as El Nino weather might well trigger higher inflation and other disruptions. Additionally, profligate local state handouts are disincentivizing employment and creating a culture of dependence that might forever erode Tamil Nadu's industrial capacity. In terms of our working results during the year 2022-23, the company's net sales hit a new record, increasing 21% to 353.1 crores from 292.6 crores in 2021-22. Domestic sales were 237 crores, 67% of sales, while exports were 116 crores, 33%. This is the second year of over 20% growth, and we hope to sustain this trend in the coming years. As mentioned in my speech to you last year, surge in demand, overinflated money supply, and disruptions in the supply chain caused significant increases in raw material prices. Incomplete pass-through of these prices to vehicle manufacturers until the end of the third quarter significantly impacted this year's profitability. Thus, the company made a loss of 5.4 crores for the full year FY 22-23, despite strong growth in sales and a quarter four profitability of 2.2 crores. In the domestic market, the original equipment manufacturer segment was 173 crores in 22-23, growing 37% from 126 crores. The company's growth is in line with M&HCV segment growing 40% and the LCV segment growing 23%. As our products developed and homologated in 2019-20, our standard equipment on almost all BS6 compliant vehicles is either the single or major source of friction for most buses and trucks. Current forecasts point to continuing strong OE growth in the year ahead. In the aftermarket segment, turnover of 64 crores in 22-23 increased by 31% from 21-22 and 21-22's value of 49 crores. Continuing increased segmental focus post-COVID, establishment of a direct stockist channel, and a conscious decision to prioritize growth here produced these results. In the export market, turnover of 116 crores in 22-23 declined by 1% from rupees 118 crores in 21-22 as a result of market slowdowns in key export markets, a shortage of forex reserves in many countries struggling with high food import bills, and manpower-driven issues at SBR. Considering the significant accumulated losses, the uncertainty and economic volatility, your board thought fit to skip dividend for 22-23 in order to conserve resources and to be able to respond to surprises in these highly volatile times. While I request all the shareholders to bear with the current situation and ask that you continue to support your company, we hope to rectify this situation in the near future. The company's outlook and prospect in terms of sales. Your company is a significant supplier of the fifth largest global economy in the most populous country in the world, with significant economic growth predicted. The potential for transport of passenger and freight is significant and growing. The push for streamlined logistics considering multimodal connectivity, Gati Shakti, dedicated freight corridors promises to further boost industrial and freight growth. Your company's extensive experience with functional composites also promises to open avenues to novel approaches to growth in the coming years. Cost reduction and cost control. The company is speeding up its implementation of productivity improvements to increase effective capacity and overcome labor shortages. It will also complete broad deployment of significant energy conservation projects in the coming 2 years and see significant reduction in energy costs. The highly encouraging pilot projects indicate that intensified focus will result in further improvements. In terms of concerns, significant volatility in key material prices and energy costs pose a significant concern. On the one hand, affecting profitability, and on the other, threatening our competitive position. The input raw materials in the company's homologated products with vehicle manufacturers cannot be changed without extensive time and testing. And while SBL's in-house development of materials allows your company increased ability to suggest material alternatives, the lag in this is not insignificant. Your company's novel capability to demonstrate the real-time trade-offs and real-world driving conditions and duty cycles for buses, trucks, and passenger vehicles, with the support of in-house developed DEFCON, driver experience of friction conditions, will remain critical in helping customers choose the right friction from us. The increased cost of food imports and strengthening of the US dollar might lead to hard currency shortages in key markets in the Middle East and African regions, leading to potential delays in repeat orders and pricing pressure. The depth and duration of potential recessions in the US and EU may significantly impact exports and will have to be closely monitored. In terms of recognition, your company's R&D facilities, located in Padi, have been recognized as an approved R&D unit by the Department of Scientific and Industrial Research, DSIR, Ministry of Science and Technology, Government of India, New Delhi, and the recognition has been renewed up to 2024. On your behalf, on behalf of my colleagues, and on my own behalf, I would like to take this opportunity to express my sincere thanks to our wholesalers, both in India and abroad, for their support and for marketing this company's product. I would like to thank State Bank of India, ICICI Bank, and all the vehicle manufacturers, customers, suppliers, and investors for their continued and valuable support. I would like to place on record our appreciation for the good work done by all of our employees of the company in these extremely trying times. Finally, I would like to thank you all, ladies and gentlemen, for making it convenient to attend your company's 49th AGM. I'd like to mention that 5 shareholders have registered as speaker shareholders with the company for this 49th AGM. I'd like to call on them one by one in turn. The first one I would like to call on is Mr. Krishna Kumar, IN 3011 3152. Sorry, 3011 5122 935 225.
Mr. Krishna Kumar, you are unmuted. You can switch on your video and you can speak.
Yeah. I'm not able to get on the video, but can I just go ahead? Is it okay?
Please go ahead.
Yeah.
We can hear you.
Good morning, Chairman and the board. Thanks for the opportunity. At the outset, I just want to wish you all a great year ahead. And as you mentioned, I think you've taken a lot of efforts to steer through a tough time with the global volatility. I've emailed a set of questions already, and just to highlight a little bit of that, you talked about exports. So they've been stagnating for more than 3-4 years at about 120 crores. So is it something to do with marketing efforts or product obsolescence or lack of products which cater to the market demand, fitment or pricing vis-a-vis other Chinese competition, etc. Second, you know, in terms of in the export market, do we also cater to OEMs, or is it more aftermarket basically? And could you give some flavor of what kind of segments, like mix of passenger CV, that you kind of target overseas, if that's possible? Third, in terms of the domestic sales of 170 crores OEM plus replacement, so is there a mix that you can share in terms of, for us to understand which is more important, commercial vehicle, passenger cars, two-wheelers, agree? So some brief color to the extent it's not confidential. Uh, and also, we have competition, as you also alluded earlier. So could you talk about how we moved in terms of market shares with key customers like Maruti, Tata Motors, Hyundai, and also in the aftermarket, how was the market share? If you can give some perspective on trends, basically. Moving on to profitability, uh, I think we do have inferior profitability numbers as margins to EBITDA to sales, etc., compared to some peers. So any reason that we have a lower operating profitability, and what are you trying to kind of address those issues? I see that labor cost to sales, material cost to sales, etc., we are lagging a key competitor, which is listed also. So, if you could outline some steps, which are going to help us going forward. I understand material costs have been a big issue and volatile also. Uh, Basically, then if you look at uh, uh, you know. R&D, basically, I think commendable work. I think that's one of the biggest strengths of TVS and your company in particular, in spite of bad years been spending. So, how do you think this new products that are coming through in terms of, will contribute to the top line? So, something like a freshness ratio, do you track in terms of percentage of sales percentage from the new products reduced in the last 2-3 years? And so, how is the impact of R&D on products, basically? And we basically understand the EV transition that's happening. So how are we preparing, and how is our content per vehicle will change? Will it improve for us because of heavier weight of the vehicle, etc.? So if you can share some thoughts and prospects there, that'd be helpful. And we always hear the asbestos fibers to be used less as we go forward. So how have we moved in terms of contribution from asbestos-free brake linings and clutch, basically? And are we also kind of moved the capacities similarly? So if you can just share your thoughts on alternate materials and asbestos-free lining, etc. And from a longer term perspective, if you can give a kind of your thoughts on over next 3 years, say FY 25, 26, where do you see this company, given the excellent measures you are taking in terms of R&D and other measures on cost reduction, in terms of where you see the revenue and return ratios for the company? They seem to be quite low at single-digit numbers. So where is the target in terms of the kind of, where do you target to get those numbers to? If you can give some direction, that will be great. Lastly, I think the MD has not drawn much of salary this year because of probably lack of profits, but I know we all understand the kind of volatility in the environment. So I would sincerely request that be corrected and be drawn for FY 23 also, if it's possible from a regulatory perspective. And we appreciate the gesture, and we definitely would be happy to see that all efforts are rewarded for everybody, including the board, etc. So thank you very much, and wish you a great years ahead, Mr. Krishna.
Thank you very much, Mr. Krishnakumar. I've listed all your questions. I will answer the questions after we've taken all the questions from shareholders, since there may be duplicate questions as well. I will group those questions together. I will answer them at the end. So I'd like to call upon the next speaker shareholder, Ms. Prakashini G. Shenoy, folio number 3002 3912 451-107.
Mr. Prakash Nishana, you are unmuted now. You can speak.
Hello, can you hear me?
Yes, we can hear you, ma'am.
Yes, ma'am.
Yeah. I'm Prakashini Ganesha Shanoy from Bombay. Respected Honorable Chairman, Mr. Krishna Mahesh, other dignitaries on the board, and my fellow shareholders, good morning to all of you. I received the annual report well in time, which is self-explanatory, which contains all the information as per the corporate governance. I thank Mr. Satyam, Company Secretary, and his team for the same. I should not forget to thank him once again for calling me and giving me the link for the meeting, without which I wouldn't be in a position to speak. Thank you once again, Mr. Satyam. The chairman has given a beautiful picture regarding the company in all parameters, its working, sales, profit, etc., etc. Sir, I have few questions. My first question is, what is the roadmap for next 2 years? What is the CapEx program? What is the future of the company? And how are we planning for digital future? What results can we expect for the next quarter? What is the total strength of the company, and what is the percentage of women folk? Please let me know. With the rise in prices of raw materials, what impact it would have on our profitability? Who are our competitors? How are we planning to increase the revenue? Last but not the least, I request the chairman to please continue with VC so that people all over will have an opportunity to express their views. I wish the company good luck for a bright future and pray God that the profit of the company shall reach the peak in due course. Sir, I strongly support all the resolutions put forth in today's meeting. Thank you, sir.
Thank you very much, ma'am. Again, I've noted some of your questions. I will try to answer as many of them as I can. I'd like to call upon Mr. Krishnan Pal Singh, ID number 120-376-00.
So the speaker holder currently is not there. We can move to the next speaker holder.
He has sent his questions ahead of time, so we will try our best to answer those questions that he has sent in that case. I would like to call upon Mr. Ashok Kumar Shankala, DPID IN 301983.
Mr. Ashok Kumar, you are there. You can speak.
Mr. Ashok Kumar Shankala, DPID IN 301983. Sir, I don't know if you're muted. Is he there?
Yes, sir. Yeah, he is there. I think we can't able to hear him.
Okay, we will come back to him in case his mic is not working. He has also sent some questions ahead of time. We will attempt to answer those questions. I'd like to call upon Ms. Kirti Shankala, DPID IN 301-983-106-9346. Ms. Kirti Shankala?
Yeah.
Yes, ma'am.
Am I audible, sir?
Yes, ma'am, you are.
Good morning, Honorable Chairman, sir, and all the Board of Director members, and all the few respected shareholders also. Good morning, all of you. Now, I'm Kirti Sakla from Jodhpur, Rajasthan. I want to ask you some questions. Our company has high fuel and power expenses. I request our management to describe how much thermopacks are changed up to date, and how many are left to be changed further. Next, I want to ask you, what is the business split by sales to vehicle segment, MHCV, LCV, and SCV, two-wheelers, three-wheelers, and tractors, and others. Third question I wish to ask you, does company have any plan to add renewable power capacity during current year for optimization of fuel expenses? If yes, then how much capital expenditure will be allocated for this in current financial year? Thank you for the opportunity.
Thank you, ma'am. I'd like to give Mr. Ashok Kumar Shankala one more chance to come in. DPID IN 301983. Sir, can you hear me? Okay.
Hello.
Yes, please go ahead.
Sir, may I audible? Hello?
Yes, we can hear you. Yes, sir, we can hear you. Please go ahead.
Sir, good morning to all. Good morning to Honorable Board of Directors, companies, stakeholders, management and employees. I congratulate to all stakeholders by whose efforts we are able to achieve our targeted sales value along with highest turnover of the company in the history. During the financial year, despite of high volatile adverse market conditions, I convey my best wishes to all participants of AGM for company's historic event, Golden Jubilee Year. I think this is the right time due to robust demand of our product. As per principles of best management, we deploy our all resources and talent to encase rare opportunities in this Golden Jubilee year to encase most favorable market conditions. I already submitted my queries to company management for their comments. I appreciate our management efforts to increase budget just double for the product promotions and advertisements. I hope it will certainly increase our aftermarket sales, which is our prime bread and butter. Being a technocrat, I also attach with transportation activities and I observe that brake lining replacement requires no highly skilled or sophisticated job. Hence, replacement work performed by general mechanics in private garages, which requires continuous supply chain management and brand recall. Hence, I utmost request to management, please improve your product supply chain management and brand recall to improve our aftermarket sales. It is very pride for companies stakeholders that our honorable MD sir, due to adverse financial situations, forgone their remuneration oblique salary for year 2022-23, which clearly shows high loyalty and dedication to our company. I wish Almighty God for better health and wealth of our audiences and their family members during our Golden Jubilee year. Thank you for giving me opportunity.
Thank you, sir. I believe this is the entire list of registered speaker shareholders. I've taken all the questions. I will try to answer them to the best of my ability. The first question asked was, why have exports stagnated over the years? Exports, as you know, are a key market for us and a source of enduring pride that our company had nearly half of its revenue from exports. And we were one of the first previous companies to export our products itself. Exports have certainly not shown the growth we would have liked in the past couple of years. However, exports are not a homogeneous blob. While our US and Far Eastern markets did meet or exceed expectations, the markets in Africa and the SAARC and Europe fell significantly short of our budget. In the first two cases, they were due to Forex availability, and the last due to product offering. In the SAARC, the Chinese Belt and Road Initiative caused significant financial distress in our neighbors, and only now are we beginning to see some recovery in these neighbors. The conflict in the Ukraine and its attendant fallouts on food and fuel prices affected the availability of hard currency US dollars for governments in African countries, and that caused a challenge for our African customers. There was strong demand, however, the countries didn't have forex reserves to actually pay US dollars, which caused the challenge. In Europe, however, the CV market continued its journey towards disc pads, and we needed to upgrade our product portfolio to compete. Fortunately, this is something we have been working on for the last 3 years, and we have developed, tested, and released suitable formulations in the financial year under review. So you should see a significant pickup in the European market from us in the coming years. We are also in the process of developing additional part numbers to increase our range in the segment. Additionally, we are making efforts to tailor our products to local driving conditions and obtaining country-specific approvals in the Middle East and North African markets. And we've successfully completed these activities and started receiving orders from these countries as well. In terms of markets we have not paid as much attention to, we have started to increase our attention there and increase the diversity of export turnover to have a more robust export market going forward, especially considering the likelihood of recessions, both in the US and Europe in the coming year. We'll continue to enhance our export strength and broaden our range of already broad range of CV linings and pads in the coming years, because we believe exports are a key strength of this company. The brand we have built in all of these markets over the past 40 plus years is something we can further continue to strengthen. The next question he asks is, what is the mix of OEM to aftermarket in exports? The majority of our exports sales in the commercial vehicles caters to the aftermarket in exports. While in the last 3 years, however, we have added OE customers such as Mitsubishi Fuso to this mix, and we're looking to add to our export OE by supporting our OE customers and vehicle manufacturers and their multinational partners as they diversify out of China in terms of their production capability and look for additional supply from India. The next question is, in the domestic market, what is the mix and split in terms of customer segments like car, UV, two-wheeler, CV, etc.? The company's portfolio is 87% commercial vehicle, 9% passenger vehicle, and 4% two-wheeler. We can also go into greater detail of this. In medium and heavy commercial segments, 76% of our sales is located, 11% in LCV, and 9% in SCV and PV. We have no three-wheeler sales as such. What is our market share in the domestic OEMs and also in the aftermarket? In the domestic OEMs, in the bus segment, our share is around 83%. In trucks and tippers, 61%. And in passenger vehicles, around 7%. In terms of the domestic aftermarket, however, it has a large unorganized segment, which is at least equal in size to the organized segment. And our share is in the high single, low double digits there. And the company is focusing strongly in its efforts to go ahead and improve in this segment, especially with our stockist approach. One of the key elements, as another shareholder's question pointed out, is our ability to supply this market is key. And so we are putting in efforts to improve our supply chain to supply these aftermarket stockists. A question was asked regarding our profitability compared to our peers. As you know, and as I mentioned in my speech last year, we continue to track both domestic and international competitors for benchmarking purposes. The two main components why Rane Brake Lining performs better than us, their raw material cost as a portion of sales is 5% lower. And so likewise, the energy cost as a portion of the sales is 5% lower. We benchmarked this earlier and we have continued to make efforts. However, that gap is actually widened by 1% from last year. The RM price increase should have affected all companies equally if you look at it in a top line. And Rane's RM price did increase by 2.4% of sales to 54.3%. However, our RM prices rose by 4.2% to 59.8%. So why did this happen? To understand this further, we must understand our company and competitors' market mix and pricing arrangements. In the aftermarket, where Rane is a much bigger player, there is the ability to pass through the entire RM price increase to the customer. In the export segments, we share the price increase with us and the customers. However, in the OE segment, given that we have a fully and largely unchangeable formulation, we depend on the vehicle manufacturers accepting RM price increases to go ahead and actually increase prices. This pass-through of RM prices wasn't completed until the end of Q3 of this year under consideration, which significantly impacted profitability for the first 3 quarters. However, if you look at Q4, the PBT of 2.2 crores is far more representative of what we expect our performance to be going forward, given that these price increases have now been actualized. In terms of labor cost, I actually think if the shareholders looked at the balance sheets of the two companies, you will see that we not only are our labor costs about 1.8% lower as a percentage of sales compared to Rane Brake Lining, we have further reduced labor cost by 2% from 14.1% last year to about 12% this year, and the year under consideration. So we continue to make efforts to reduce other costs as well. If we can go ahead and fix the raw material and power costs, for which we are making considerable efforts, and the raw material costs have already borne significant fruit, and the energy costs continue to show promise, and we expect to have them done this year. If the 10% swing were to happen, instead of making a 5.4 crore loss last year, we would have hit 31 crores of profit. So just want to put that in context as to where the swing occurs. And we expect that this year, some of that will be actualized. In terms of R&D spend, our R&D is efforts can be broadly looked at in terms of increasing our offering in terms of breadth, depth, and then other associated products. So what do I mean by breadth, depth, and associated products? For breadth, it is taking a product we offer and offer similar product to the common market. So for example, we offer CV linings. We are a significant player in the CV linings market. We have been developing and have tested and released copper-free CV pads as well in the last year. So we expect to see significant growth in that market as well. In terms of depth, increasing the related product offering. So for example, we offer linings. We are also offering riveted shoes, which we have developed and now exporting to customers in the US. And finally, associated products, using equipment that we already use, we want to find alternative uses for that. So we basically, if you look at it, we've been producing functional composites for the last 45 years. That is composite materials that have a function providing friction. We now want to take that same experience in composites and apply it to structural composites, which are glass and carbon fiber related structural components. And you will see some pickup in sales in this area in this year. How our brake lining is going to be impacted by the EV transition? So let me answer this in this way. EV is going to affect every segment of the automotive industry. However, it's going to affect them unequally. So I will give two contrasting extremes of this. So commercial vehicle trucking is one area where the amount of freight load is a critical element. And we believe there is almost going to be no EV penetration into this. However, we do see there is a decarbonization that can be achieved without EV, and that is a hydrogen ICE. So this is where trucks burn hydrogen in the internal combustion engine, producing no carbon dioxide, but largely producing water. So there is significant movement by our vehicle manufacturers to release hydrogen ICE vehicles in the coming year, but there will be no EV per se. So the driving conditions will be almost exactly the same. The weight of the vehicle will remain largely the same. But however, as freight loads increase, we expect to see an increased number of CV linings per vehicle, and therefore further sales to increase there. On the other extreme, you can look at two-wheelers and maybe to some degree light passenger vehicles, where EV is beginning to become a significant portion of sales. In two-wheelers, for while the FAME subsidies were in place, nearly a third of the sales were EV vehicles. So this is an area where there will be significant increase in EV penetration. And again, you do need frictional braking because at the end of the day, the most certain type of braking is frictional braking. So we see no change in the number of frictional linings that we sell. However, there will be significant changes in the driving pattern and the type of friction formulations that are suitable to EV type driving. And there we have developed products, and in fact, our products continue to be deployed in, for example, in buses and in two-wheelers as well. And we expect this to further grow as we formulate our R&D stands us in good stead in making EV directed formulation as well. In terms of asbestos-based friction, I'm very glad this question was asked because I think while the world is focusing on significant issues as greenhouse gases and such, asbestos is a known carcinogen that has been banned in 67 countries and restricted in over 50. It is a known carcinogen which this company completely eliminated in 2011. We have 0% asbestos sales. We consider it a moral imperative knowing that this material's carcinogenicity and its ability to create terrible lung cancers like mesothelioma, that we cannot and will not supply it. We have in fact worked very hard with vehicle manufacturers for 20 years before we went ahead and eliminated it to ensure that we can provide strong products that are completely asbestos free. Almost all vehicle manufacturers, largely due to the efforts of our founder chairman, have gone ahead and eliminated asbestos completely from their formulations that they would accept. There are one or two exceptions for export product, not from our company, but that vehicle manufacturers still use in the export products, and we are working very hard to convince them to even remove those. In the aftermarket, our competitors continue to sell asbestos. However, we are working with the government and with the regulatory bodies to show them the dangers both to fitters who fit linings onto vehicles, as well as the actual commuters who are sitting side by side with these vehicles in their braking, the dangers of asbestos in their breathing. So we hope that our efforts there also do result in the elimination of asbestos. We are seeing an increasing coalition of manufacturers who recognize the dangers of asbestos, who are beginning to come out strongly in favor of eliminating asbestos altogether, and we hope to eliminate asbestos from this market in the next coming years. We, however, since 2011, have had 0% asbestos, and we continue to keep that as our gold standard. There was a question asked regarding our medium target for the 3 years. And I'll talk a little bit about this. Our return on capital employed is our primary metric. Our target there is 20%. Now, as anyone might ask, given the loss that we made, what do we mean our target is a ROCE of 20%? But as I mentioned to you, the two gaps that we have and we are working very hard on are the RM percentage and the energy percentage. If you look at our labor cost percentage, over the last 5 years, we have dropped from 19% of sales to 12% of sales in our labor cost. We are now making similar efforts, and we would hope to, historically, our RM percentage has been about 50% of sales. Right now, this year, it is 59% of sales, so there's a 9% swing. We hope to reduce that by at least 5% in this year. Similarly, energy costs sitting at 9.5%. We hope to bring down to about 7.5% in this year and to about 5% in 2025. So our aim in 2025 is to have a 500 plus crore company where our ROCE is 20%. And we believe this is very achievable because if you looked at that 10% swing in RM and energy cost at 31 crores, we would have had a ROCE of about 31%. So we believe this is an achievable target, and by 2025, we would hope to go ahead and achieve these targets. And I hope you will see the progress in this year as well. So it is not, don't worry about the coming year, look at 2025. The coming year itself, you will see significant progress towards that target. And in 2025, we hope to keep that target. In terms of the questions, there were some questions asked about what have we done with our thermopacks, and this feeds right into our energy questions. We believe that these thermopacks, which are basically large boilers that used to burn furnace oil. Furnace oil is the dirtiest form of petroleum. It's basically the dregs that sit at the bottom of bunker fuel. So we have gone ahead and completely started eliminating them in plant by plant. We are going ahead and replacing them with what we call the thermoelectric heating system, TEHS. The reason for this is electricity can be very clean. Now, if we were to use furnace oil, there is no way for us to choose a cleaner source of energy because the furnace oil is furnace oil. It is, by its definition, dirty and carbon producing. TEHS allows for electricity to replace the thermopack, and this is heated on a per cavity basis, which allows us to go ahead and make improvements in each individual press by press. It allows us to also go ahead and use our existing formulations and processes without making drastic changes and then having to revalidate every one of our formulations. Given now we make a safety critical product, it is very important for us to go ahead and deliver the same process conditions to our customers so that the product's performance is exactly the same every year. So this TEHS deployment has been started in the last year. We have gone ahead and replaced 3 out of our 7 boilers, and we will expect to see all of them completed in the coming year. And so coming fiscal year. So you should see an improvement in our energy mix there. This will also produce potentially significant improvements in our carbon dioxide and greenhouse gas emissions as well. So in terms of environmentally friendliness, this should improve as well. Now, looking more broadly as energy as a whole, we have two things. We have to look at amount of energy we consume, and then what is the cost per unit of that energy. So we're making efforts on both fronts. In terms of energy as a whole, as I mentioned, we have about 9.5% is our target. By replacing to TEHS, we wish to bring that down to about 7.5%. Further energy improvements will allow us to bring the entire energy cost down to the 5% that I mentioned by 2025 is our target. In terms of cost of energy, we're also looking at solar, wind, and other alternative sources of energy to allow us to go ahead and use factory demand and other demand that increases along with the supply of this energy. So this is something we're working on as well, and that should allow us to further reduce our energy costs. And in terms of supporting our growth, when we talk about what is our target in 3 years, as I told you, we wish to be in the 500 to 600 crore range by 2025. In order to do that, we wish to increase capacity. There was a question asked, what is our CapEx plan? In terms of CapEx plan, we have a plan to increase our capacity by 50% in order to hit that 500 to 600 crore target. If you recall, our current sales is 360 crores. So to get to that, we have to increase our capacity by about 50% at least. In that, 30% of that improvement will come from internal improvement. This is improvement in our processes, improvement in our output per machine. The remaining 20% will come from CapEx. So we expect to invest in this. Now, as you know, we have 5 plants. We have Padi, plant 4 and 5 in Mahindra City, and we have TSK plant 1 and 2 in Madurai, Virudhunagar. So we hope to go ahead, and plant 4 remains so far underutilized significantly. And so there is significant potential for us to increase our number of cavities without huge investment in infrastructure. So the plant sits ready for us to go ahead and expand. So the capex that we are going to see is mainly in machinery and not in plant. There is also going to be investment in R&D as we go ahead and try to expand our product offering in a number of different ways. There was a question asked on aftermarket, and this aftermarket is a channel where we believe it is our most profitable segment, and we believe we need to focus on this significantly more. We have always gone to the aftermarket through our distributors, and we continue to do so. However, to address the aftermarket and its significant potential, we have added a channel into the aftermarket, which includes stockists. So distributors will serve those dealers who require credit, who cannot hold significant amounts of inventory themselves, and who cannot order in large truckload quantities. However, these dealers have continued to grow, and there are dealers who are large, able to go ahead and provide their own source of capital, able to hold the inventory that's needed and place large orders. Those we will try to serve directly as stockists, because distributors add very little value to them. And we think this is a channel that is much better served by direct supply from the company. We expect to see significant growth in the aftermarket in the coming years and the years ahead, as we put more and more effort into expanding our product mix and actual sales focus in this area. I believe these were the questions that were asked. If there are any questions I have neglected to answer, please feel free to write to us, and we will try to answer in greater detail to you. I'd like to thank all of you for attending this meeting. I will say this, in terms of what is the projection going forward, I am severely constrained by SEBI requirements in terms of discussing it, which is kind of ironic because you are the owners of the company along with me, and an AGM is open to all of our fellow owners. So the fact that I'm prevented by regulations from actually discussing this further is an ironic situation. However, those are the regulations of our country. I would, however, ask the shareholders to look at both the economic conditions of our country and look at our performance in the last quarter and the efforts we are making. and make up their own minds on how we are going to perform going forward. I'd like to mention that as per provisions of the Company Act 2013 and listing regulations, voting through remote e-voting was completed on 27th of July 2023, and the e-voting at this AGM will end 15 minutes after the conclusion of the AGM for the following resolutions listed in the notice of the meeting. The first one is the adoption of audited financial statements and the report of the board and the statutory auditors thereon for the financial year ending 31st March 2023. And the second is the reappointment of Ms. Shobana Ramchandran, DIN 00273837, who retires by rotation. I'd like to mention that based on the scrutinizer's report to be received after the e-voting at the AGM, the results about the passing of these resolutions will be announced within 48 hours and posted on the company's website at www.tvsbrakelinings.com and also communicated to the stock exchange. I'd like to request our director, Mr. KSD Sambasivam, to propose a vote of thanks, please.
Namaste.
Yes, please. You're audible, Sam.
Namaste. I'm Sambashivam, Director of Sundaram Brake Linings, and I would like to propose the vote of thanks, please. I thank my director colleagues for giving their experience, guidance, and their excellent participation in the board and in the various committees. My special thanks to the Managing Director, Mr. Krishna Mahesh, for steering our company with his excellent contribution in uplifting the company performance during these testing times where major economies around the world are struggling. I take this opportunity to thank NSDL for organizing this video conference facility. The shareholders are a great strength to our company. Their questions and observations which helps us introspect and make the necessary changes. Happen to be a guiding tool. I thank the shareholders and especially to the shareholders who raised questions during this meeting. I once again thank all of you for attending this meeting. Thank you very much.
I'd like to thank everyone and declare the meeting as concluded. Thank you.
Thank you. Thank you.